Hello, everyone. Good morning from this part of the world. It's exactly 9:34 a.m. local time. That's about 8:34 a.m. UTC. And I'm very, very excited as always to welcome you to another promising edition of our Forex Morning Mastery. Well, today is a very, very important day of the week considering the major economic events everyone in the market are looking forward to, from the FOMC minute release, which is coming up later today, to the GDP report coming up tomorrow, and of course the US core PCE coming up on Friday. And we also have some important event from the Japanese economic docket as well, which are going to be playing a significant role in determining the direction of price action. So, as a result of this, today we are going to be reviewing how well the assets we've been monitoring since the beginning of the week have been doing. And of course, we are going to be looking at the fundamental factors and see how market participants are digesting this information, which obviously will reflect on the chart as price action, and use this information all together to strategically position ourselves for the next move. Now, since the week began, we have been monitoring three financial instruments, which includes the USOILSPOT, which is currently still struggling at the moment. We also had the USDJPY, where we're currently doing very well. And of course, the XAUUSD, which has been the most profitable asset since the beginning of this week. And before we go into the nitty-gritties of these assets, I would like to welcome newcomers in the house. Most of you have joined me from the from the TradingView platform recently, and I'm very excited to have you join me today. My own name is Sheriff Daramola, and for the next 30, 45 minutes to an hour, depending on how long or soon the session ends, I'm going to be your host as we delve into the financial market together. And it's important for you to also understand that this is not a signal service platform, but an educational avenue where we all come together as a community to try and understand how market participants are thinking, and of course, using this understanding to strategically position ourselves for the next move. So, I'm very excited to have you join me today. Once again, you are very much welcome. And that reminds me, we run this session three times in a week. That is Mondays, Wednesdays, and Friday. I think I did not mention that earlier, which is important. So we run it three times in a week where we come together to understand the market. So once again, I welcome you on board and encourage you to actively engage in the comment section. And don't forget to give the video a thumbs up if you have found this content, the session helpful in making your independent trading decisions. Why not give the video a thumbs up and let's make this community thrive and grow. And thank you very much as you do so. I see you, Constant. Good morning to you. Glad to have you around with us today. Trust you are doing very, very well. So, with that said, here we're going to be delving into the markets. And of course, the first thing we normally do every morning is to keep tabs with the fundamental factors surrounding the US dollar market dynamic. And of course, you know how important the US dollar is to all of the assets we are monitoring. So there is no way you want to be trading the US All Spot, the USDJPY, and of course the XAUUSD without really understanding how the US dollar market dynamic works. Obviously, they play a significant role in determining the sentiment around this particular market. Now, with that said here, since the new week began, we've seen some little bit of rebound in favor of the US dollar thanks to Donald Trump's postponement of the 50% tariff on European goods till July 9th, which obviously had played a significant role in pushing the prices of the US dollar upward. And at the moment, the US dollar is caught between solid data and rising rate cut bet, which is currently the reigning sentiment at the moment. And of course, this week's economic releases and geopolitical tension will decide who is going to take control in this market. Now, let's look at the technical side of the US dollar market dynamic. So if you look at the chart here, what you see on your screen right now is the US dollar index, which is also known as the DXY. So this chart here gives us an overview of how well the US dollar is doing across all the major assets. And from what we saw here on Monday, remember we had a platform around the $99 area, which had played a significant role in supporting the prices of the US dollar in the last 6 to 7 weeks. We can see, despite the strong bearish move on the US dollar market since the beginning of the year, we saw how the $99 level continue to resist continued selling pressure. So every time price comes into the zone, what did we see? We see buyers come in to push price to the upside. Though we had a little bit of a breakdown here during the third week of April, but we saw a week after, price climbed back above the structure. And ever since then, price had continued to maintain momentum above or around this area. And not until last week we saw price come back into the structure, which interestingly shares a confluence with the support line of this descending channel we identified after capturing the character of price action in the last 2 weeks. Now, for us, if you remember, especially for those of you who are part of this session on Monday, we did mention that we are going to be monitoring how market participant will be reacting to the $99 area. That is, we want to see if price will break down, retest the structure to incite a sell-off, or will buy pressure persist around the $99 area to incite price maybe coming back into, let me zoom in, coming back into the resistant line of that descending channel, which is exactly what is happening right now. As you can see, the last 12 hours has seen price action continue to consolidate around the resistant line of that descending channel. So it has been a very good move. We saw price move over, how many pips is that from that level? Moved over 75 pips from that particular area, further emphasizing the strength of the US dollar so far. Now, the question as we head into the second half of the week is whether or not this resistant line where price action has been for the last 12 hours will continue to be respected, just like it has been doing in the last 2 weeks, to bring price to the downside again, or are we going to see a situation where the resistant line here will be broken to the upside to incite an uptrend continuation? So you would agree with me that going into the second half of the week, we are at a critical juncture in this market. So we want to see what is going on and how the market will play around the structure. First of all, the week has been very good so far for the US dollar. So if we look at the economic calendar, yesterday we saw a stronger than expected US data. For instance, we saw the durable goods order and of course the consumer confidence index, which surprised majority of market participants, giving the US dollar a push. Now look at the durable goods order. We saw a deficit of 6.3%, which was a little bit higher than the market expectation. But in as much as this is the case, we see that even though the data came in higher than expected, it's still a deficit which is way below the previous month data. So for me, it's still a red flag. though we had some optimism around that, but it's still a red flag that this is not coming in positive. Then the consumer confidence report, I don't know why the FX Street economic calendar is not showing that report. So the report came in at about, I think, 93, which was way, way higher than what market participants expect. I think this is the highest in about half a year, about 6 months, thereabout. Then this has also caused some improving risk sentiment, especially in the equity market, as investors are feeling a little bit more confident, reducing the need to flee to safe haven assets such as gold and the Japanese yen, which are on our watch list for this week. Then the truce talk between US-China situation is seeing some positive light, and this has been a relief for market participants, indirectly giving the US dollar some breathing room to rise. However, in as much as the US dollar has started the week on a positive note, the expectations around the Fed interest rate cut is still on the table. Market are still pricing in at least two rate cuts for this year, which could weaken the US dollar in the longer term. And considering the fact that price is at a resistant line of that descending channel, will this be the point where sentiment will begin to shift back again against the US dollar, pushing price to the downside? Then another factor that could further support a downtrend scenario here is the worsening US budget concern. I talked about this on Monday, where Donald Trump did this, what he called a big, beautiful bill, which is expected to balloon the current US deficit at this point in time. And this is also coming as a red flag for buyers of the US dollar. Now, with this whole situation coupled with the geopolitical tension, that is the Ukraine-Russian conflict, the uncertainty in the Gaza, it keeps the dollar on the hedge, but haven't triggered a full risk-off sentiment yet. So today we are going to be looking at how the market will react to this, and one of the major things that could influence the sentiment in this market is the anticipated FOMC minute release, which is coming up later today, and the timing of that is 6 p.m. UTC. That's about 7 p.m. local time. Now, this is going to be giving market clues on the Fed's thinking around future interest rate cuts. Now, if there is a dovish outlook, we may like, for instance, if there is, if the minute pushes a narrative that supports monetary policy tightening, we could see the dollar continue to rise, breaking out of that resistant line to push price further to the upside. But if there is an outlook that portrays that interest rate will be cut anytime soon, then we could see the price of the US dollar drop to the downside from here. Then later in the week, we also have the GDP, which is coming up later tomorrow. That's about 12:30 p.m. UTC tomorrow. Everyone definitely is looking for these figures. Weak numbers could pressure the US dollar, and good numbers could also influence the US dollar positively. Then on Friday, we have the core PCE, which is considered to be the Federal Reserve's favorite inflation gauge data. Now, a soft reading can strengthen the case for rate cuts, hereby pushing price to the downside, and a very good data could spur the US dollar to the downside. So with all of this information here, how do we intend to navigate all of the assets we are monitoring, and how is this fundamental going to be influencing the US oil, the Japanese yen, and of course the gold commodity? So let's dive right into this chart to see what is going on and how we intend to strategically position ourselves for the next move. So before we go into the details, I think I see a comment here. You said from Constant, who says that before last year concluded, you said you would give us tips that you have learned on your Forex journey. I have not had any this year. Well, are you part of the premium membership? I talked about some of them during my Forex market prep sessions on Sundays, which I usually do on a weekly basis. And if you're part of that, definitely you must have seen it. So I'm very sorry about that if you are yet to get them. But what can I say? So let me know if you're part of the Forex market prep, which we normally run on Sundays. That's where I usually share most of my personal ideas. Okay. So I hope I answered you correctly there. So with that said here, let's move into the first asset on our watch list for this week. So as always, the first asset we are looking at here is going to be the USOILSPOT. And since the beginning of the week, we've not been able to capitalize on some significant movement in the US oil spot market. And the reason is basically simple. The market has been a little bit choppy. And within this old choppiness, the market has been finding some lower lows and lower highs, which makes which tends to give the path of least resistance to the downside. And oil is currently sliding as rising hopes of Iranian oil return to the global market, and of course looming OPEC plus output boost, which is really weighing on oil prices at this point in time. Now, what do I mean that there is a rising hope of Iranian oil returning into the market? Well, we've been talking about the US-Iran nuclear talk, which has been going on for weeks now. And if a deal is reached, and we've been having some positive feedbacks from these meetings, if a deal is reached, sanction could be lifted, allowing Iran to increase oil exports, leading to more supply into the global market. And we know what simple economics tells us: when supply increases, what happens? Due to the surplus of this of this commodity in the market, price will definitely drop. Then the other factor that continues to exert pressure on oil prices is the expectations that the OPEC Plus will be adding another 411,000 barrels per day in July, which could flood the market and pressure prices much more lower. So in the midst of this, the market is already leaning in towards this direction. As you can see, despite the fact that the market has been choppy, we've seen some series of lower lows, lower highs, lower lows, lower highs, and then we saw one move into the structure before it came back into the $61 area. So it's looking as if the price of oil will drop to the downside within this old choppy situation. However, in as much as this is the case, we cannot ignore the fact that if the talk between the US and Iran fails, Iranian oils will stay off the market, keeping supply tight and supporting higher oil prices. Now, we don't know what the outcome is going to be, though there has been some positive signals, but we need to keep our eyes on the news to hear outcomes from this meeting from time to time. Now, the Trump delaying the EU tariff deadline also eases global economic fears at the moment, at least in the meantime, potentially boosting oil demand slightly due to activities between the Euro and the US. Now, within this whole dynamic, how do we think market participants are digesting this information? Well, at the beginning of the week, we had a range bound structure. If you remember, we initially saw that price was confined within the $61.95 level and the $61.35 area for the first 12 to 13 hours of this week. And then we had a situation where we said we will be buying if price breaks out of the $61.60 level. I think I bought right here during the live stream on Monday, but unfortunately that buy position did not do very well. Then we saw price come down to break the support line of that range bound structure to trigger our first sell position for the week. And throughout yesterday, we saw the market oscillate below the $61.35 level before this move here happened into this trend line, roughly about 110 pips before price action came back to the upside. So we were able to close it with about 50 pips thereabout on this one. And if you look at the bottom of your screen right now, you will see that I already have two sell positions running on the USOILSPOT at this point in time. I think I had one running. When was that? I think it was this morning. I triggered one around the $60.889 level. Then I also had another one triggered at the $60.98 level. Both of them which are running with a total of about 35 pips in profit at this point in time. Now, will this momentum continue? Well, we don't know. As you all know, we're still looking forward to the FOMC minute release today. If the data shows a dovish outlook, we see a drop in US dollar. And if the dollar drops in value, what happens to oil prices? Oil prices will become very cheap for other currencies to buy, and this could increase the demand for oil, pushing price to the upside. But if the outlook remains very hawkish, well, then the USOILSPOT is expected to continue to nosedive. So in order to help us navigate this market today, I have a simple trading setup on my 15 minutes time frame, which is right here. So you can see right here on the 15 minutes time frame, the first thing I did observe is the fact that the market is on a downtrend in the last 1 week. So ever since price tested that supply zone at the $63.50 level, we saw price found lower highs, as you will see here. A series of lower highs connected, giving us this beautiful descending trend line. And as long as price remains below our descending trend line, we definitely are going to be looking out for patterns and structures that support selling ideas. We will not consider buying unless this descending trend line is breached and broken to the upside. That will be the only condition that will make us consider buying the USOILSPOT. So at this moment, this is what I'm looking at. A consolidation phase right around that descending trend line. As you can see here, we have price confined within the 61 and the $60.65 area in the last 12 hours to emphasize the prevailing uncertainty ahead of the release of the FOMC meeting today. Now, what I'm looking at here is if price continues to drop, a breakdown of the $60.65 level will definitely be welcoming more selling ideas. So I will place a sell stop order below the structure, and of course by the time price moves below the structure, we will be moving stop losses on the previous sell positions. In fact, I do want to move stop loss to break even on one of the sell positions so that I don't expose myself to too much risk. So I will use this last one here. So I will place my stop loss at the $60.95 level. So let me move my stop loss to $60.95 level. So if that one closes, it will take me out at break even. And if price goes ahead to break down the $60.65 level, we have the opportunity of maximizing the bearish move. And of course, trust me, I will be with you in the comment section of my Telegram platform to give us updates as I continue to monitor the character of price action. Now, if we are going to consider buying the US oil spot this week, I want to see price take out that trend line, that descending trend line. And by the time price breaks out of that descending trend line, it would have taken out this psychological level at the $61 area. Then I can start considering buying. And in fact, I would love to see maybe a breakout retest of structure for confirmation's sake to continue the trend to the upside. And of course, add more buy positions at the break of the $61.35 level. So far this week, we've really not done pretty well on the US oil spot. The first position we took, that is the buy position, closed in a loss. The second one closed with about 50 pips. So roughly we are about break even sort of at the moment. So hopefully the second half of the week will give us some significant move to close the week with. So I want to wish us all the best of luck on the US oil spot. Please mark out the structures accordingly, as they will be used to help us navigate this market today and tomorrow till we meet on Friday. Now, if you have any questions whatsoever as regards to what I have illustrated so far, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right, sorry everyone. I had to take a long break. I was attending to my little boy. He needed my attention. So sorry about that, but I'm back now and ready to go. So, do we have any questions whatsoever? Okay, I see you. Okay, Constance says he's from Ghana and due to his location, he does not have access to the premium. Oh, all right. Okay. So we'll see what I can do about that. Probably I could do some take some short excerpts and share them on my shorts. Maybe that's what I will do. I will consider that one. All right. Okay, so in the absence of no further questions, I guess we are all on the same page, right? And with that said, I think it's high time we moved on to the next asset. So please let's mark out the structures accordingly. We have a range bound structure. We're looking at a breakout retest of the $61 area to buy, and of course we're looking to continue downtrend if price action breakdown retest the $60.65 level. And I did mention that I do have two sell positions triggered already and move stop loss to break even on one, and hopefully the other one I'll continue to monitor it. And if this momentum shows signs that buyers are beginning to take over the market, then I'll probably manually close the other one. So with that said here, I wish us all the best of luck on the US All Spot, and we move on to the next asset on our watch list. So the next financial instrument we are looking at this morning is the USDJPY, and of course we have started the week on the USDJPY on a positive note. Though the first buy position we took went into a loss, so let's do a quick recap of what we did at the beginning of the week. So we had a descending channel marked out prior to the beginning of the session. So we had this whole structure here. Then we had the resistant line of that descending channel right here. Hopefully we were looking at a breakout retest of that structure to emphasize that buyers are taking over the market. Then the inability of sellers to break down that support line here at the 142.350 became a positive flag, positive signal for us to consider buying. And remember, we bought the 142.750 area just right here, and unfortunately that buy position did not do very well as we saw price drop down, taking us out at stop loss with about, how many pips of stop loss was that? About 50 pips of stop loss as we lost that move. Now later in yesterday, in fact I think I updated us on my Telegram platform if I remember. We saw price breakout retest the 143.00 level. Remember we talked about this on Monday, our key level, which is the 143, where we said by the time price breaks out of the 143, price would also have broken out of the resistant line of that descending channel, which signals that buyers may be taking over at that point. And this was exactly what happened. We saw price move about how many pips was that? Moved over 175 pips before we saw sellers losing momentum and the market went into a consolidation phase moved my stop losses to break even, and it was just about 10 minutes ago, we saw that buy position closed with how many? Okay, let's look at it. So if you look at the history here, you will see that the buy position closed with $13.24. That's about 70 pips thereabouts at this point. And of course, we can see how the 144.100 level have been playing a significant role in the last 18 hours or so. Now, will this be a platform that will incite new bullish momentum today? Well, at the moment, the as we can see, the Japanese yen is moving sideways for about since when is this? Since yesterday afternoon. That's about 12 to 15 hours. We've seen the Japanese yen move in a sideways manner, confined within a range bound structure. And the reason behind this is simply because at the moment there are two opposite forces that are pulling on this market. On one hand, Japan Central Bank might raise interest rates soon, which usually strengthens the yen. And on the other hand, global markets are feeling confident and less afraid, which usually weakens the yen, of course. And because of this tug of war, traders are being careful and waiting to see what the upcoming data from Japan and the United States will say before making any aggressive bets, which is quite understandable. Now, we talked about this when we were looking at the economic calendar earlier. As you will see, we had a bunch of economic events for the second half of the week from both economies. We are looking at the FOMC minute release later today. Then tomorrow is the gross domestic product annualized for quarter one from the United States, where market participants are expecting a deficit of 0.3%. So markets are looking at a potential contraction in the US economy in the last quarter. Now, if that becomes the case, that is, if the US economy contracted, this could further favor the Japanese yen. But if we see any surprising figure, that is, an expansion happens, we're definitely going to see an uptrend continuation for the USDJPY. Then besides this, we also have the CPI data coming in from the Japanese economic docket tomorrow. Now, if the CPI data from the Japanese economic docket comes in higher than expected, it will favor the Japanese yen. So we also have the retail sales data from the Japanese economic docket. So these are very, very important events. Then later in the week, we have the core PCE from the United States. So it is quite explainable why we have this range-bound structure going on the chart. Now, from the fundamental perspective, the path of least resistance since the week began remains to the upside, thanks to positive global resentiment as the mood has changed in favor of the US dollar following Trump's delaying the EU tariffs. And of course, we had some positive US data, which obviously reduces the demand for safe haven assets. So we saw some beautiful data from the United States. Durable goods order came in higher than expected. We saw the which other one again? The consumer confidence index coming in way higher than market expected to as well, further supporting the US dollar at this point. Then the narrative surrounding the cautious policy from the Bank of Japan. Yesterday we learned that despite the hawkish talk from the Bank of Japan is still careful about acting too fast until trade outcomes and rate impacts are clearer. So this could bring in a little bit of indecision into this market. But if we look at things from a longer term perspective, the path of least resistance for the USDJPY still remains to the downside, thanks to Bank of Japan rate hike expectations, as investors believe that the Bank of Japan could raise interest rate further due to rising inflation, giving the Japanese yen some strength. Then the latest data from Japan shows inflation is no longer just isolated. It's spreading across more sectors, giving the Bank of Japan reasons to tighten policy further, which obviously supports the yen at the same time. And of course, if we also take into account the expectations surrounding the US Federal Reserve interest rate cut, the dollar might not be looking very attractive at this point in time. Then the geopolitical tensions there too as well is not in favor of the US dollar. And as a result, we may likely see some reversal move anytime soon. Now, with this said here, I want to remain neutral at the moment until something significant comes in, until a clearer macro economic shift happens, which aligns with maybe a long-term long-term fundamentals. Now, I will only be bullish for the US dollar if risk sentiment remains strong and upcoming US GDP or PCE report exceed market expectations. So that will make me continue to hold on to an uptrend scenario. And to help me navigate this market in that direction, I have a simple trading setup on the 15 minutes time frame, which captures the consolidation phase we've been seeing here since the Asian session. So it has lasted about 7 to 8 hours now, that consolidation, as you can see. Now, this captures it very, very well. So if we see price climb back within the range bound structure, maybe something like a breakout retest here, I'm willing to buy and then add more buy position at the breakout of the 144.775. So what I will do right now is let me place a buy stop order at the 144.207. So I'm doing that right away. So 144.207, I'm placing a buy and then have my stop loss below the previous low here. Let me do that correctly. So there you go. You see it right at the bottom of your screen. I just placed a buy stop order above that area. Then I will place another one above the 144.775. That is this area right here. So if price can go ahead to break out of the resistant line of this range bound structure, it will further support the uptrend continuation. So I'll place another buy stop order there. Hopefully we see price break out, retest that structure. So that is that on that particular one. Now, if we are going to be considering selling the USDJPY, I want to see the CPI from Japan come in hotter than expected, that is higher than market participants had expected, or we should see the Bank of Japan show stronger hawkish resolve. And if this is going to be the case, we may see the price of the USDJPY drop to the downside. And if I am going to be selling the breakdown of this particular zone, I want to see confirmation happen. Remember, since this week began, the price of the USDJPY had found higher highs and higher lows. Now, if I want to sell within this higher highs and higher lows, I would love to see a good confirmation happen. And that confirmation will come with some significant breakdown of structure, continuous selling pressure below this area before I will join a sell. And if price comes close to this trend line here, let me show you how I got to identify that trend line. So you can see This trend line had continued to be a resistant line at the beginning of the week before we saw the breakout happen here yesterday, and there is a likelihood that price could come back into the trend line here to incite the uptrend continuation. So what I'm simply saying here is this: if we sell the breakdown retest of the 144.2 and 0.1 area after continuous selling pressure below that juncture, as soon as price gets close into this trend line here, by the time price gets close, we will be seeing something like about 30 pips. Please move all stop losses, secure the sell position while we wait and see how the market will react to the trend line. If price gets into this trend line or before it and begin to find buy pressure, it could incite an uptrend scenario. But if price breaks down and retests the trend line, it could incite more selling ideas. So that is basically what we are going to be doing on the USDJPY for today. So we have a simple structure, a range bound, of course, where price has been confined within the 144.775 and the 144.1 area. So we want to see what happens around this area. Breakdown retest will confirm a sell for us, and if price climbs above the 144.200, like I did say earlier, I already placed a buy stop order. So let's see how the market is going to play out. And of course, I will be updating us on both my TradingView and Telegram platform as we continue to monitor price action. So that is my simple view on the USDJPY for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in. All right. So in the absence of no questions, I guess we are all on the same page, and I hope we've mapped out the structures accordingly. We're at a crucial juncture where we continue to monitor price action around that 144.200 stroke 144.100, depending on how price reacts to this area. And it's important for us to understand that we could see an extended sideways trading activities due to the fact that majority of key players in this market will be waiting for the outcome of the FOMC meeting minutes coming up by 6 p.m. UTC today before taking any aggressive bets. So let's take this into account while we move or strategically place our stop losses. So that is basically what we are looking at on the USDJPY, and I wish us all the best of luck, and will be giving us updates as at when due on my Telegram platform. So moving on to the final asset on our watch list. Final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And prior to my commentary this morning on XAUUSD, for those of you who are with me on my Telegram and TradingView platform, you must have gotten an update onto how we are going to be managing the trade today. And prior to that time, when I shared that commentary, the gold market remains stuck in a limbo as strong US data and the US dollar gains clash with rate cut hopes and global tension. As you can see, we had a situation here where after that massive move that started yesterday brought us to this juncture. And of course, before I go in, congratulations to everyone who was part of the strong bearish move we witnessed here yesterday. Remember, let's quickly run through how we started this week. So we had a range bound structure at the beginning of the week, remember? And this whole range bound structure was happening around the resistance line of the descending channel we marked out at the beginning of the week. And for the fact that buyers were finding it difficult to break out of that resistance line of the descending channel, we were of the opinion that price could drop to the downside. And we mentioned here that the only condition that will make us buy is for price to break out of the $3,356-ish, which obviously never happened. Instead, we saw price come into structure, retested multiple times before it triggered the sell position at the $3,331.50 level, and in fact price moved over 400 pips before buy pressure resumed. I think I moved my stop loss to somewhere around the 3,310, closed with about 200-300 pips thereabout at that point in time. And for those of you who are part of this profitable journey, well done and kudos to you. Now, the bearish momentum we saw in the last 2.5 days can be attributed to a stronger US dollar. We saw the dollar rise due to upbeat data and improved economic sentiment, more expensive for other currencies to hold. Then the positive equity sentiment also became a major barrier for price of gold, as we saw the stock market rally significantly in the last 48 hours, reducing investors' demand for gold as a hedge, pushing price of this commodity to the downside. Now, in as much as we saw a strong bearish move at the beginning of the week, I am still of the opinion that the gold still has a lot of room to the upside. One, we still have a geopolitical tension ongoing, like the ongoing conflict where Russia's continue to strike Ukraine. We have the unresolved Israel-Hamas situation ongoing, and of course, during geopolitical tensions like this, we expect increased inflow for safe haven assets such as gold. Then the rate cut expectations from the US is not helping matters, as traders are pricing in at least 2 rate cuts, which reduces the opportunity of holding the gold commodity at this point in time. So For me, I still strongly think that part of this resistance for gold remains to the upside. We're just looking at how far this retracement phase will go before that uptrend scenario will happen. So for now, how do we trade the gold commodity? Of course, we are going to be waiting for dips and strong breakouts of structure, especially if upcoming FOMC minutes or the PCE data aimed at a dovish policy. And if that is going to be the case, we'll consider buying. And if geopolitical tensions escalate further, we continue to favor the gold commodity. Now, we will only start considering selling from a fundamental perspective if the US data comes in, US data beats expectation. I'm talking about the GDP, the core PCE, and of course the which one is that again? The core PCE. Then we have the initial jobless claim count. If it comes in, beat all expectation, we could see the price of gold drop to the downside. So we want to be trading cautiously around these major releases like the FOMC, the GDP, and the PCE, as they can flip sentiment very fast. So to help us navigate this market, I updated my commentary this morning on the gold commodity with this new trading setup on the 15-minute time frame. Now, right here on the 15 minutes time frame, after taking into account the range bound structure, that is the consolidation we saw here, we can see price remained confined in the last 24 hours between the 3,315 and the 3,290. Now, within this range bound structure, you will notice that price is finding higher highs and higher lows. Now, this gives us this ascending trend line you see here, and you know how we use our ascending trend lines. As long as price remains above them, we shall continue to look out for patterns and structures that support buying ideas, right? And as a result of this, I placed a buy position, as you can see at the bottom of your screen, after updating us on my Telegram and TradingView platform. And the position is doing very well at this point, running with over 140 pips in profit at the moment. As you can see, price has finally broken out of that resistant line of that range bound structure to emphasize buyer strength. Now, we have a new structure gradually unfolding right now around the $3,324 area. So I want to acknowledge that level, very, very important. So we have the 3,324 level, 324 level, which continues to resist the uptrend continuation, as you can see here. So I think it's high time we moved all stop losses. Let's secure some profit at this point. So I will just do that right away. Move my stop losses on that buy, secure some profit, and let's wait and see how the market is going to be reacting to this $3,324 zone. If price can break out, retest the 3,324, definitely we'll be looking to add more buy positions to our existing trade. So what I'm going to do right now is place another buy stop order above the $3,324 area to maximize that uptrend move if price moves in that direction. So as soon as that breakout is triggered, I will move my stop losses to somewhere around, that is my stop loss on the first buy position, to somewhere around the $3,319.50 level, while I hope that that trigger at the 3,324 will continue to the upside. So at this juncture, I want to maintain a bullish bias. So even if price drops down, I still maintain a bullish bias. Remember, price is still above the trend line, so we could still see price come to as low as any of this trend line to inside the uptrend continuation. So I will not be feeling any form of anxiety if sellers come in. But if you are a scalper, you may be looking at joining a short-term approach, but I will just stay put and wait to see how the market will react to that trend line to decide if I will be continuing the uptrend move, right? But if price breaks down this trend line, then at that point I want to start considering selling. So I would like to see a breakdown retest of that structure to inside selling ideas. And if price goes ahead to break down the $3,290 area, I will be adding more sell positions. So you can see the only condition that will make us sell here is for that ascending trend line to be broken and retested to the downside. If that does not happen, we maintain a bullish bias. So that is my simple view on the XAUUSD for today. I hope I made myself very clear. If I didn't, to some of you, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. Stay tuned in. Alright, so in the absence of no questions, I guess we are all on the same page, right? And it's on this note we have come to the end of today's Forex Morning Mastery. We were able to run through all of the 3 financial instruments on our watch list, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD. Like I said, we're still struggling on the USOILSPOT, but we've done pretty well on both the USDJPY and the XAUUSD. So hopefully the market will continue to go in our favor for the second half of the week, using the setups we have identified on the 15 minutes time frame across these assets we are monitoring. I do hope you mark them out accordingly. If you have done so, well done to you. So all we just need to do right now is exercise patience and allow the structures to mature. For those who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we have discussed here today. If you have done so, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach. So I look forward to seeing you again on Friday, 8:30 a.m. UTC, that's 9:30 a.m. West African time, as we come here again to review how well these assets have done and of course prepare ourselves for the final trading day of the week. So I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.